Good morning, it's today again. Welcome back to Joseph's Reserves. I'm Joseph and I store 20% of my income in the form of rare coins and precious metals. Most weeks in the metals markets look pretty similar. Prices move up or down, and analysts will argue about trending lines or resistance levels, but the charts keep grinding along. But every once in a while, you'll get a week where the metals complex tells a much bigger story. And this past week was one of those, because something unusual happened. Gold, silver, platinum, and palladium all fell at the same time, yet copper actually went up. And that kind of divergence isn't something that happens very often. But when it does, it can reveal something important about what's really driving the metals. So today we're going to talk through exactly what happened across the metals complex this week, and we're also going to take a look at the price movements of gold, silver, platinum, palladium, and copper specifically. Then we'll take a look at the two ratios I'm watching very closely, the gold to silver ratio and the platinum palladium ratio. And of course, finally, we'll talk about copper and what that might be signaling in the broader metals market. But most importantly, out of all of this, we're going to talk about what this could mean for stackers who are actually trying to build and balance a precious metals portfolio. Congratulations to my wife, Asneth, for being the first comment on my video yesterday. Of course, I can't do any of this without you, so thank you so much for your support. Taking a look at this week's movements from March 6th to March 13th, all precious metals have moved down. Gold closed at $5,019, which is a decline of 2.98%. Silver closed at $80.69. That's a drop of 4.61%. Platinum closed at $2,037, which works out to be a downward trend of 5.48%. Palladium closed at $1,567, falling about 4.54%. So across the precious metals complex, everything is down. But copper did something very different. Copper closed at $5.87 per pound, rising at about 1.32%. So while all precious metals corrected downward, the main industrial metal in the complex actually strengthened. And that divergence is one reason that this week is so interesting. But before we get into the ratios and broader signals, let's walk through each metal individually. Starting with gold, gold fell just under 3% this week, making it the strongest performer amongst the precious metals. Now, at a first glance, a decline might seem like weakness, but relative performance matters the most in a raw move. When you compare gold's performance to silver, platinum, and palladium this week, gold actually held its value the best. This is something that long-term precious metals investors look at quite closely and that the long-time stackers see quite often. Gold tends to act as a stability anchor of the metals complex. It's the primary monetary metal, and it's held by central banks. It's used as a reserve asset, and it historically has served as a store of value during long periods of economic uncertainty. Because of that role, gold often experiences smaller swings than all of the other metals in this metals complex. When the metals are on a rise, gold may rise steadily, while silver and platinum explode much higher. But when the markets pull back, gold usually falls less, and that's exactly what happened this week. Gold declined, but it declined less than the rest of the precious metals. And that kind of relative strength is something that stackers often appreciate during volatile times. Next, let's talk about silver. Silver dropped 4.6%, which is about 50% more than gold's roughly 3% decline. This is extremely common behavior for silver. Silver is both a monetary metal and an industrial metal, but in financial markets, it often trades like a leveraged version of gold. When gold rises strongly, silver often rises faster, and when gold corrects, silver often falls faster. This is one of the reasons silver can attract speculative traders during bull markets. The volatility can be significantly higher than gold. For stackers, though, that volatility can both be a risk and an opportunity. Silver tends to offer more of an upside during strong metals rallies, but can also experience sharper pullbacks during consolidation phases. And this is exactly what we saw in this week's dynamic. Gold corrected modestly, but silver corrected more aggressively. The difference between the two metals can show up clearly in one of the most important ratios of the metals market, the gold to silver ratio. And we'll come back to that in a moment. But first, we're going to talk about platinum. Platinum actually experienced the largest decline this week, falling almost 5.5%. That made it the weakest performer amongst all of the precious metals. Platinum is an interesting metal because it sits somewhere between monetary metal and industrial commodity. It's a precious metal and it has historically been used in jewelry and investment products, but a significant portion of platinum demand comes from industry. It plays a major role in catalytic converters, chemical production, and increasingly in emerging technologies like hydrogen fuel cells. Because of that industrial exposure, platinum sometimes behaves differently than gold and silver. When traders become cautious about economic growth or industrial demand, platinum can experience a sharper decline. In weeks like this one, where precious metals pull back broadly, platinum sometimes ends up being the most volatile in the group, and that volatility showed up very clearly in this week. Next, we can talk about palladium. Palladium also fell lower this week, about 4.5%. But interestingly, palladium held up slightly better than platinum. Palladium, like platinum, is heavily tied to industrial demand. Its largest use is in automotive catalytic converters, where it helps reduce emissions from gasoline engines. But it's also increasingly used in electronics, hydrogen fuel cells, and various chemical processes for its unique catalytic properties and ability to absorb hydrogen. Over the past decade, palladium has experienced some dramatic price movements as supply constraints and changes in automotive demand push prices much higher. But because palladium and platinum serve similar industrial roles, traders often compare them directly. That comparison shows up in the platinum palladium ratio, which we will discuss shortly as well. This week, palladium's slightly smaller decline relative to platinum causes a shift to that ratio. Finally, let's talk about copper. Copper was the only metal in the group that actually rose this week. While gold, silver, platinum, and palladium all moved lower, copper gained about 1.3%. Copper is often referred to as the metal with a PhD in economics. That nickname exists because copper demand is closely tied to economic activity. Copper is used heavily in construction, power infrastructure, electronics, electric vehicles, and renewable energy systems. Because it touches so many parts of the global economy, copper prices often move based on expectations about economic growth and industrial demand. So when copper rises in a week where precious metals are falling, it can signal something very important. It suggests that the sell off of precious metals may not be driven by fears of an economic collapse. Instead, it simply reflects short term positioning that changes in financial markets. In other words, traders may be reducing exposure to precious metals without necessarily becoming bearish on commodities or industrial activity more broadly. And that distinction matters quite a lot. And now we'll finally get to talk about the ratios. First, the gold to silver ratio. This ratio measures how many ounces of silver it would take to buy 1 ounce of gold. At the start of the week, this ratio is roughly 61. And by the end, we're now at around 62. That means that gold outperforms silver during this pullback. Rising gold to silver ratio often occurs during corrections. When speculative enthusiasm fades, the metal markets cool off and traders frequently move capital towards the more stable monetary metal, gold. Silver is the higher volatility and tends to fall faster. For stackers, the gold to silver ratio can be a useful tool to understand how this metal complex is behaving. When ratios fall, this means that silver is outperforming gold, which often happens during strong bullish phases. When the ratio rises, it means that gold is outperforming silver, which is more common during a consolidation period. This week clearly fell into the second category. And next we have the platinum to palladium ratio. The platinum to palladium ratio also shifted slightly this week. At the start of the week, it was about 1.31, and at the end, we've got 1.29. That decline means that palladium held up better than platinum. Because these two metals compete in many of the same industrial applications, particularly automotive catalysts, shifts in this ratio can sometimes reflect changes in expectations about supply, demand, or substitutions between the two metals. In this case, the move was fairly small, but it highlights the fact that the platinum group metals can move independently of gold and silver. All of this brings us to one of the most important concepts for stackers: diversification across the metals. Each metal plays a significantly different role. Gold tends to act as the monetary foundation. It often holds its value best during corrections and periods of financial uncertainty. Silver tends to move more volatile, but can be the deliverer of strong upsides during a metal's bull market. Platinum and palladium are influenced heavily by industrial demand and technology trends. And copper, while technically not considered a precious metal investment, can provide important signals about the health of global economy and industrial demand. By understanding how these metals interact, investors and stackers can gain a clearer picture of what is happening across the broader commodities landscape. Diversification across different metals can also help balance the strengths and weaknesses of one another. Gold may provide stability, silver may provide volatility and upside, the platinum group metals may offer exposure to industrial growth and technology changes, while copper can provide early signals about where the industrial demand might be heading. This week's metals market may look simple at a first glance. Precious metals fell, copper rose. But when you dig a little deeper, the relationships between these metals tell a much richer story. Gold held up amongst the precious metals. Silver declined more sharply, pushing the gold to silver ratio higher. Platinum was the weakest metal of the group, while palladium held up a bit stronger. And copper's strength suggests that industrial demand and expectations of the economy may still be strong. For stackers and metals investors, these relationships are more important than the day to day price movements themselves, because the metals complex is not just a collection of individual markets, it's a network of interconnected signals. And understanding those signals can help you see where capital is flowing, where demand might be building, and how different metals can play different roles in a long term portfolio. And weeks like this one offer a great reminder that sometimes the most interesting stories in the metals market does not appear in the headlines, but in the relationships between the metals themselves. I just made my own line of coffee. Joseph's Reserves It's Today Again coffee. Most mornings aren't dramatic. They're quiet. You wake up, pour yourself a cup, and now you have a choice: drift through the day or take hold of what's in front of you. That's really what this whole thing's about: showing up, building good habits, staying disciplined in the small things. Whether that's stacking consistently, learning something new, or just being faithful with what you've been given. I put these words on every bag to remind myself first. Every morning is a gift. Not yesterday, not tomorrow, today. So take a breath, take a sip, and let's get to work. It's today again. You can now write me at Joseph's Reserves, 10160 Highway 242, Suite 800, number 401 in Conroe, Texas, zip code 77385. Make sure to include your information so I can write you back. If you like this video, make sure you go down and give it a thumbs up. Go into the comment sections for any questions or comments. Make sure you share the video if you know anyone that might like content like this, and subscribe if you haven't already. But most of all, thank you so much for watching. And just remember, every ounce adds up. So no matter how small, just keep stacking.